Hi, and welcome to the Stockscores Market Minutes for December 17th, 2012. This week's topic into 2013. I'll look at some of the important barometers to monitor early in January for how the market tends to go for the rest of the year. A reminder to subscribe to my free weekly newsletter at stockscores.com/newsletters.asp and to also subscribe to this YouTube channel. Another reminder to watch this video in full HD, click on the little HD symbol in the bottom right hand corner and select either 720 or 1080p. That'll give you the highest resolution to watch this video. And one more thing, this will be my last video of the year. I'm going to take a couple weeks off. I'll be back early in the new year with the Market Minutes videos. All right, let's get into this week's topic. According to the Stock Traders Almanac, the first week of January is an important barometer. The first 5 days of trading tend to precede what happens for the rest of the year 84.6% of the time. If the S&P 500 makes a gain in those first 5 years, well, there tends to be a gain in the S&P throughout the year 84.6% of the time. Also, a down January for the whole month tends to predict a bear or sideways market for the rest of the year. So that first month of the year is very, very important. In 2012, the first 5 days of January were up for the S&P 500, and the result was that we had a gain for the overall market that year. So it's something really important to watch as we go into 2013. How the market behaves in that first week is very important. Now, there is a tendency in the year after an election for it to decline, so we're going to have to watch those two things as we go into 2013. All right, let's get a look at the charts here. I'm looking at 5-year weekly charts. I've been looking at pretty short-term charts in recent market minutes analysis, and this week I thought I'd look at the longer-term weekly chart going back 5 years. The S&P 500 is in a upward trend. It flirted with that upward trend line about 6 weeks ago, but has held that line. We are trending along it. If we were to get a sharp downward move through the green lower boundary of this upward sloping channel, that would be a negative and predict a likely pullback in the market. But for now, the bottoms are rising, the tops are rising. That means the buyers are in control in the long term, and we should remain optimistic about U.S. stocks. The Canadian market has been trending sideways for the last 18 months or maybe 16 months and really doesn't look all that exciting, but it is building a rising bottom as it tests resistance. So we want to watch this market for a real break through the upward boundary of this channel. If we get that sometime in the next few weeks, we could see a pretty decent rally in the Canadian market. And I'll talk about one thing that may be supportive of that in a moment. The Russell 2000 has lagged the S&P 500, which essentially means the small caps have lagged the large caps, but they are building optimism, and this pattern suggests that we will get a breakout through resistance in the months ahead, and that of course would be positive for retail investors who tend to favor the small cap stocks in their trading. The 20-year bond ETF is building a pennant, and it's got a little bit of a downward bias here. We've got a falling top, and a break through the lower boundary of that pennant would indicate money is coming out of the safety of U.S. Treasuries and coming back to other asset classes, likely the stock market. So you want to watch this chart for a breakdown because that would be a positive for the overall stock market. U.S. dollar is the one thing that could be very supportive for stocks and commodities, and we see here a break of the upward trend back a couple of months ago. We've built a falling top since then. All signs here indicate that the U.S. dollar is likely to continue to wind its way lower, and a weaker U.S. dollar is supportive for commodities because, of course, it makes commodity prices less for foreigners who pay in their own dollars and have to buy U.S. dollars. And so this could be very supportive for the Canadian market if we continue to see this trend of a lower U.S. dollar. The euro is testing resistance, has built a rising bottom. The market tends to move in some correlation to the euro because it tends to be opposite the US dollar. So if the US dollar goes down, the market goes up, and typically the euro goes up as well. And it's good to see that the euro is starting to firm up after quite a lengthy period of struggle in Europe. and we get a break of that downward trend line, which we're flirting with right now, that would be positive for stocks in general. Gold is in pretty much a neutral pattern. It's been trending sideways. It has built a little bit of a rising bottom here, and certainly weakness in the US dollar is going to be supportive of gold. But until we get a breakthrough resistance at the red line, I'm not too excited. And even then, getting a break through that line is going to not have a whole lot of upside to the all-time highs on gold set back in 2011. So I'm on the slightly optimistic side for gold, but not overly bullish right now. The cycle in the oil market is one of falling tops, and we are testing support. So therefore, we should say that the sellers are in control, but we are at support where the market tends to bounce. You can see over the last 4 years how many times the market has bounced off of that trend line, or pardon me, that lower line of support in green there on the chart. And so we should see a bounce here, but if we get a breakdown through that floor, that is going to indicate a likely downward move for oil. The fear index, and this is a bit deceptive to look at the VXX because it tends to lose value over time with some decay, but you can see that the tops are falling. And basically, as I've said many times in recent weeks and months, fear is not a factor in the market right now. So I am bullish on US stocks, particularly the large caps, although I think that that strength will start to rotate out of the big cap stocks and start to pick up some of the action in the smaller caps. I'm neutral on Canadian stocks, but with a slightly optimistic bent because we do have rising bottoms on that chart. We just need to see that breakout. You know, the Canadian market has been pretty dead for most of this year, and I think it's probably time that it gets some action again, but of course, a weakening US dollar will be supportive of the Canadian market. Gold, I'm neutral, slightly optimistic, I suppose. Oil, bearish, but we are at support, so I'm not too worried about a big drop down, but we do want to watch for a breakthrough support. A weakening US dollar and good upward momentum in large caps should be supportive for stocks and commodities into 2013. It'll be important to watch the first 5 days of January as they are an important barometer for how the rest of the year will go. Well, everyone, have a happy new year. See you in 2013. Best wishes to you and your family for the holiday season. And as I said, this will be the last Market Minutes of 2012. I will see you again early in 2013. Have a great week in the market and trade well.